10 habits to avoid when day trading.
Impulsive trading. Making trades based on emotions, news, or rumors can lead to poor decisions and losses. Overtrading. Taking too many trades in a short period of time can lead to fatigue and poor decision-making. Failing to plan. Trading without a well-defined strategy and trading plan can result in impulsive decisions and poor outcomes. Chasing losses. Trying to recover losses by taking bigger risks or making more trades can lead to further losses and a cycle of chasing losses. Focusing too much on profits. Trading solely for the purpose of making money can lead to ignoring risk management and making impulsive decisions. Ignoring risk management. Failing to set stop-loss orders or not using proper risk management techniques can lead to significant losses. Overconfidence. Feeling invincible after a few successful trades can lead to taking bigger risks and ignoring warning signs. Lack of discipline. Not sticking to your trading plan, breaking your own rules, or not following a consistent approach can lead to impulsive decisions and poor outcomes. Holding on to losing trades, refusing to cut your losses and letting losing trades run can result in significant losses. Trading too large. Taking too large a position or risking too much of your portfolio on a single trade can lead to large losses and damage your portfolio. Failing to manage emotions. Allowing fear, greed, or other emotions to influence your trading decisions can lead to poor outcomes.